Good morning. Welcome to Market Mashup, our weekly recap of financial markets and what we have in store for this upcoming week that might impact stocks and bonds. I'm Scott Nasca, President of Generation Capital Management. We had a mixed market last week as the Dow Jones was up 0.6%, S&P 500 was down 0.3%, and the NASDAQ was down 1.9%. So once again, for the second week, we've seen profit taking in the higher growth tech-oriented companies in the NASDAQ. And obviously they have been the leaders for the first 7 months of 2023. So not a concern at this point in time. Looking at the other factors with stocks, you just want to pay attention to, obviously money moving out of higher growth into some value stocks. That's why we saw the Dow Jones up a little bit higher over the last 2 weeks versus the S&P and NASDAQ. In regards to the bond market, we always like to show the levels of the 2-year and the 10-year. Right now, the 2-year is at 4.94 and the 10-year is at 4.18%. So we have a 76 basis point inversion. Continuing to have the same pattern over the past almost year and a half right now, where we see shorter end of the curve higher in terms of yields than the longer end. If history shows us anything, this usually leads to economic slowdown and recession. It's something we've been talking about for many market mashup sessions right now. So just keep an eye on this. I know the Fed does as well. I wanted to just also throw in what the current 30-year mortgage rate is, because that is something that everyone is concerned about in terms of especially new home buyers out there. It's right around 8% right now. So a significant move over the last 18 months, where we had 30-year mortgage rates, some situations right around 3%. So you've seen almost a 500 basis point or 5% move in mortgage rates. And, that will lead to a slowdown in housing starts at some point, as well as people looking for mortgages, just in terms of being able to qualify for the types of homes. Looking at data points this week, we have a lot coming out again, more on the consumer side. We have retail sales coming out on Tuesday, initial jobless claims are on Thursday, and the Philly Fed PMI data is on Friday. We do have the release of the Fed meeting minutes that's out on Wednesday, so you want to see if there's anything in those notes that give an indication in terms of the Fed's forward-looking guidance with interest rate policies, and where they feel data points that are important that might impact their viewpoints going forward. We do have earnings coming out this week, retail earnings especially, with the Walmart, Target, and Home Depot coming out. I want to see a good indication of what the consumer's doing right now. If they're spending, if they're pulling back, get some indications from the companies if they see any guidance going forward in terms of spending habits and how they're stocking inventory. Something that you want to pay attention to. If you'd like to reach out to us, feel free to look at our website, www.gencapmgmt.com. Our team is ready to answer any questions that you might have. Give your portfolios a second opinion. Make sure that your allocations meet your risk tolerances and goals and objectives. We've got a lot of timely articles up there. Take a look at John's top tips for financial planning advice. And if you have any questions or would like to reach out to us, our team is ready to answer any questions you might have. Once again, my name is Scott Nasca, President of Generation Capital Management, and this is Market Mashup. Have a great week, everyone.